Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have the CEO, Travis McIntyre from CanadaBis Capital. CanadaBis trades on the TSX Venture Exchange under the symbol CANB. The company is currently trading at 10.5 cents with roughly 137 million shares outstanding, or about a $14 million market cap. I'd now like to hand it over to Paul Andriola.
Thanks a lot, Trevor. Great to have you here, Travis. Cannabis is a sector that we start to find a little bit more interest in the last little while, predominantly because companies like yourselves are starting to make money, which is something that's been in short supply over the last little while for this industry. So thank you a lot for joining us today. Let's dive right into it. I want to find out as much as I can about CanadaBis and what your future looks like.
Well, thanks for having me. I really appreciate it. It's been a ride and a half over the last 6 years for us. So again, I appreciate you guys' time and look forward to it. So Travis McIntyre, CanadaBis Capital. We have our subsidiaries of Stigma Grow, Indicative Collection, which is our retail arm. I'll kind of go through some of the fun stuff here, but we'll see some forward-looking statements a little bit today. I guess I just urge everybody to go over to our CDR filings to ensure that any information is found on there regarding CanadaBis Capital. So a part of our companies and our brands, our production facility is Stigma Grow. It's a 66,000 square foot facility that has a fairly small amount of grow, but we really focus in on the production and extraction sector of the cannabis. The next one we have is one of our arms, our Indicative Collection, which is our retail arm. It gives us a lot of good information, good feedback from our customers directly, so that we know what products to produce and who wants what and how they want it. And under Stigma Grow, we have several brands. We have our Dab Buds, which is our most recognized brand. We have our Black NGL, our White NGL, and then we have our female lineup, which is our High Priestess. Female focused brand, a little more bougie, some nicer hardware than what we have in our other lineups, but a little on the higher end of things. So we'll go next slide there. Financials. So that's the fun part about this. We've as you alluded to, I guess we're making money. Something that really isn't and hasn't been done to date in cannabis across Canada. We raised a small amount of money and really focused in on building a business that is a true business, not a bit of a one-off. We want to build sustainability into our companies. We've done it in the past with some of our other companies, and this one's no different. We really feel that cannabis does have legs. It's not going anywhere. It's just a matter of how do you financially make it work. And very few have figured it out, not for the lack of trying. I think most people have done a wonderful job, but it's been very fast-paced, very I'm going to say an ever-changing marketplace that we've really faced over the last 2, 3, even 4 years. And it's tough. It's really tough. However, we're seeing the light at the end of the tunnel. For some, we're also seeing some downward trends with some employees being laid off across some of the bigger guys. But it gives good opportunity to us as a mid-sized producer. We see what we do in CanadaBis Capital or Stigma Grow is we actually take some of these lower priced inputs, we transform them into higher priced outputs, and that gives us the optionality to really play in the sector with price compression coming down and down and down. We've got good locked in supply agreements for the next 2 years. And that gives us the ability to have some profitability. You know, our last quarter, we did about 7.8 million in gross revenue and just shy of $1 million in adjusted EBITDA. That transformed into a net income of 700,000. You know, we're looking to continually grow on that. I think over the last, I'm going to call it 4 or 5 quarters, we've continued growth. We don't see that trend slowing down. We've got a very deep innovation pipeline that pushes that forwards, and we're proud of that. So we'll go next slide. So we'll go on to some of our annual and quarterly financial reviews. Again, you know, we pushed, as you can see, the graph going up, and we like to call it the hockey stick effect, but that's where we're really pushing towards is, you know, Q1 2022 versus Q1 2023. We've got a huge increase, and we really pushed steady growth. I know a lot of others tend to push for this immediate growth. They're trying to immediately appease anybody but the company. And we really feel that as a steady continuation of growth going on, that we can, you know, we can differentiate ourselves. And that's what we've been doing. And that's how we've really gained our success, or gauged our success, even as, you know, how we've been hitting the 5, 10, 15% quarter over quarter increases. And that is our goal. Again, because we see the legs in cannabis. We don't see this as a short-term play. We want to be here the next 10, 15, 20 years. Along to the annual results. Again, we got a little bit of forward looking in here, but again, our hockey stick effect. So we've got our, you know, Q1 at 7.8, I think it's 7.85. And, you know, we're going to continue on 2021, 2022 at 17 million on our annual. And to our 2023, we're projecting 30 plus. We're on track for that currently, barring any market changes or what have you, but that's where we're sitting at today. So, our position. So this is a fun one. So we took the stretch, I'm going to say 4 years back on actually getting into the butane hydrocarbon industry before Health Canada had allowed it. We built our building out to be on spec with what was needed for local regulatory requirements, as well as what we thought Health Canada would require for handling the high explosives that butane may be. We built a bomb-proof room, or a C1D1 class facility for our extractions. And then we went on to wait, and luckily we got the green light. We got the check mark, and we went ahead with our butane extractions. We were some of the first butane hydrocarbon extractions in Canada. We've released several first to market products, and they've all been very successful. They've been really well received. Our goal is to give the products that's in the illicit market a run for their money. We really want to see pricing, quality, and availability of what may be in the illicit market onto the legal market. That's really what we're all looking for, is that safe, quality product that we know we're not, it's actually properly done. It's Health Canada regulated. It's under our quality control and GPP practices. And that's where we kind of pushed into the extraction side of things. So part of our vision is to become Canada's recognized leader in the hydrocarbon space. And we operate within independently and agile, grown organically and partnered strategically. What I mean by that is we do grow some in-house, but we also have great partners that grow for us. We take advantage of their extremely large facilities. They have some amazing growers. They have some amazing product that comes out of there. They might just not be positioned as well as we are to have national distribution, or they may have too much product, and we take advantage of that wholeheartedly and keep our COGS in check. And it really is what pushes our quality up and our prices down. So, okay, we'll go next one. Thanks, Trevor. Okay, so last year, this was our last year, fiscal 2022. We sold 95,000 cases across Canada. 1.1 million units sold, and that equated to 5.8 million grams of dry equivalency cannabis. If you kind of figure out what that works out to, it's a lot of truckloads of cannabis. It's you know, an average grower or an average facility across Canada will grow 5,000-6,000 kgs annually. So we're taking, if you can imagine that we're taking fields, a size of a field, you know, about 1.5 million square feet of grow space, and we're transforming that on an annual basis into high value propositions. That really is our differentiator. You know, we sell a lot of product, mainly Alberta, and that's what we focused on. We sell a good amount into British Columbia. We have great partners in Manitoba and Saskatchewan. And then we have good partners in Ontario. We have a bit of a key focus there on gaining larger market share, but we really wanted to look after home. We're Alberta-based companies. We wanted to ensure that we have a good Alberta footprint and spread our wings from there. And it's been working for us. And we even sell Northwest Territory. So everybody up north is enjoying some good product. We see the concentrate space really is I'm going to call it a smaller product line as of today. However, if you look at the trends in California and Colorado, that concentrate space grew from 2 to 5% all the way up into the 15s and 20% of the overall market space. We're seeing very similar trends in Canada right now. We're really taking hold, and we came out with another innovative product as an infused pre-roll. So where we actually take a wet infusion, it's our live resin, we infuse it with flower, and it gives the best of both worlds. So we have flower users and we have concentrate users who are really can come together, and anybody didn't want to smoke flower or anybody didn't want to smoke concentrates or figure out how to use them, we gave them that option. And that's really been a good success for us in 2023 space, and continuing forwards. We've managed to grab a good chunk of market share by doing that. And we just wanted to give that optionality so that, you know, we really listened to our customers, and that worked out well for us. Over the last, I'm going to say this would be 8 months, we launched 32 SKUs in the provinces across Alberta, Ontario, BC, Manitoba, Saskatchewan. Total, we have about 307 SKUs in market. Again, individual SKUs across multiple market spaces. And yeah, I think our main growth, we've got good growth in Ontario still to come, and penetrate into Quebec as well. We've got a small amount in Quebec. Quebec is very limited on what they can and can't take. A lot of our THC volumes are too high for Quebec. So we've got product lines coming out that'll match their regulations. So, okay, Trevor, we'll go next one. Just quick indication on product sell-through and product overviews. Again, Alberta, cases sold by province. We have a large volume in Alberta, BC being next, and Ontario being at 17,000 plus cases. You know, if somebody asks, where's our growth? Where's our easiest growth and our best growth? The growth would be Ontario. Currently, it sits at 53% of the overall market space, and it's third on our list. So that really tells us that we've got a large increase to go there. So, we'll go next one. So here's some of our brands and some of what you can see and what you expect in some of our new innovative products. Under our Stigma Grow brand, we sell some of the traditional market, more on the medical-ish side of things. You know, we got to use the cautionary terms on the word medical, but Phoenix Tears, RSO soft gels and capsules, CBD soft gels and capsules, and whole bud of some of our craft flower out of our facility, and then our craft candles, which are our 1 gram pre-rolls there. Dab buds is where we sell a lot of our products. It's really resonated with the customers. It's kind of a little cheeky, little fun play on some of the words, but people love it. So we are resin infused pre-rolls. We have some shatter infused pre-rolls, moon rocket blunts. All of these were, and moon rocks, all of these were first to market innovations by Stigma Grow. So shatter, again, back into a concentrate. Caviar, live resin vape pens, again, another first to market across Canada. We started the trend back, say, about a year and a half with a true live resin vape pen. No fillers, no additives, no harmful PPGs or MCT oil added to the vape. So it's a real whole natural way to have a vape. And then some of our FSE shatter vapes. And then we've got some little secrets there, but we've got some electric darts coming, and they're cigarette style pre-rolls, small 0.35s, cute in a pack, very nice, very discreet. They'll be coming later this year. So our High Priestess lineup is, again, our little more bougie, a little more high-end line. We have everything that's natural kind of going into this lineup. So our high THC live rosin vape, it's all organically grown product. It's organically processed, and then we put it into a vape cart. 1-to-1 CBD live resin vape cart, again, organically grown product. And then our high CBD live resin vape. Currently, from our knowledge, we're the only ones that do an actual live resin CBD. Lots of guys are using a distillate or a distilled format, and the way we describe that is if you grabbed a bottle of alcohol and you want a distillate or a distilled product, it's your Everclear. You know, there's not very much flavor, not very much aroma. It's straight alcohol. You know, if you want to go for that, that's your thing, I guess. We really try to get them all a little better experience for everybody. So we have a full flavor, full benefit, full plant in there. So we do a live CBD, and you get all the other cannabinoids in there as well. A good product. White NGL and black NGL. We have live resin vapes in both of those lineups, and that's really our focus on our vapes. That's where we brought and initiated the live resin vape carts. Go next one. Again, back some of our brands, Stigma Grow. Kind of go through these a little bit quick, but we bring out what we do under Stigma Grow is we do it a chapter 1. And this really gives us the feedback, again, using the retail store to find out what customers want, if they are enjoying a product line or not enjoying the product line. We call it a chapter 1. So it's chapter 1 of either the product story or Stigma Grow's story. Go next one, Jeremy. DABODs. This was our designed to make everybody feel comfortable. We use the word play on dad bods, and our marketing team came up with a really good design and put it out there, and we got amazing feedback on it. So it was the price points, in that mid-range. It was kind of our mid-range lineup. Excellent product quality, again, good partners, and really that play on making everybody feel comfortable about walking into a cannabis store and buying a product. And that's what this brand is focused on doing. And the next one, so you can see on the right hand side, a higher end cart. We have rose gold carts. All of our products that are in this are naturally organic. We really wanted to put a feel good product together. We use we had the ladies in the facility really design and get the feel of this brand. And it uses zodiac signs. So, Libra is a full balanced 1-to-1. Aquarius is in there, Scorpio. It really gives that aura of good feeling and high quality organic products. So, well, the next one, black NGL and white NGL. We use this one. It was kind of again, our play, good marketing materials from our group internally, and it's either the black or the white, the good or the bad. And we had a bunch of different product lines coming in with this, and it resonated very well with customers. We used it for indica and sativa, so we really identified whether it was an indica or sativa, and which lineup that you wanted to feel today. Do you want to feel happy, or do you want to feel relaxed and calm? So go to the next one. So what makes us unique? Transparency. Transparency is a great one, great part of our business core. We want to make sure that everybody is understanding that we don't use natural or unhealthy fillers or materials. Availability, we make sure that everything's really grown in-house or manufactured in-house, with the growing being in some of our partners facilities. But this gives us the ability to have a good amount of control on how much we have, where our quantity is, that we don't overpromise and underdeliver. Again, what agility. So I guess what makes us a little bit unique is we're a smaller operation. We're growing now. We're quite a bit bigger than we were, but really we're easy and nimble to move with the market space. If we feel that there's a product line that needs to be out next month and the product call comes through, we produce it. If we have a good group of customers that says, I want something red and we have something blue, well, we have the ability to make something red. Just as an example, it really pushes that quickness, nimbleness as a small company, while still maintaining that, the public company mentality. So go next slide. Value proposition. What makes us unique, and why would it be a good idea to invest in CanadaBis capital? And it's quite simple. We have a large asset base. I think we have $21.7 million as our appraised asset value on our facility. Our facility is very unique. It's not a custom built cannabis facility. It's a custom built facility for manufacturing. So what I did is I built a 100-year building. We didn't go through and build it so that it's not repurposable or never usable again in 60 years down the road. If something happens to the cannabis space, we still have a hard asset that has the value of a retail play involved in it. So it really keeps everything in check long term. Very little debt. I think as this screens, we got 8.7. We're below 6 currently. We've been actively and really aggressively paying off any of our debt because we are making some money. So that gives us our, roughly a floor value of 13 million, if we're looking at that way, before anything else comes into play, which, about 10 cents a share. Now, what we want to do is we want to add in some of our existing operations. So 20 times LQ&A revenue gives us about 62.5 million, or a 46-cent share price. Again, that's roughly based on any of the smaller cap Canadian LPs at a 20% discount to management assumptions. And then our implies enterprise value. So this is where it gets fun. And at 62.5 million, it gives us 46-cent share price implied. Again, with the debt being lower than it is currently on here, it gives us even a better position. We've got about $1.5 million in cash and growing consecutively. We have that gives us about a $55 million valuation, $59.2 million valuation, or 40 cents. Now, we know the market's tough. We know that cannabis is a tough space, and it's a really it's been negative. It's been negative over the last 3-4 years. So we really want to see that change. And I think that this is one of the companies that can make that change and make people believe in some of the propositions that are out there. Next one, we'll go again, market share. So this is all public information. This is all based off of I guess it'd be an end of 2023 survey. Top 10 brands. So we're sitting in Alberta for market share. We sit number 2. We battle back and forth between number 1 and number 2 with some of our competitors who are larger and have larger share prices than us. So it really shows that we've gained a lot of market share. British Columbia, we sit at number 1. Saskatchewan, Manitoba, again, number 1 and number 2. And Ontario, we're climbing the ladder, and we're climbing it fast. We're really gaining a good amount of market share in Ontario and across the rest of Canada. So why? Well, I think really we're pushing products that people want. We listen, we produce what people want. not what we think, because who knows, we're wrong most of the time, but we really want to produce what somebody wants. And that's what sells. So if we listen to our customers and produce what they want and be nimble, we think we can succeed in this market. So that's about it, I guess. So for as far as the investor relations goes, any questions? But obviously there's some invest@CanadaBis.com. I can share my email as well.
Sorry, Travis, we lost you. I think you muted yourself by accident there. There we go. We didn't catch that last sentence.
Oh, sorry. So yeah, any investor relations wise, by all means, I can share my email. I'm always open for a call or an email. Investor relations also invest@CanadaBis.com for any questions.
Excellent, fantastic. Well, thank you, Travis. Guys, I want to remind everybody, if you want me to ask Travis any questions, we do have a hard stop in about 18 minutes. So if you get any questions, just let me know. Use the chat function, and I'll do my best to ask that. One of my questions was going to be what makes you different. I think you really explained that through the presentation. But what has happened in your best guesstimate, I guess? I mean, we've seen so many companies in the space with so much money thrown at them. You're one of the smaller players, I'd say, or one of the ones that didn't get the couple $100 million.
No.
Yeah. So why are you guys not profitable? And all these guys that had all this money thrown at them, why aren't they doing as well as you are? Why do you think that is?
You know, I don't know why they're not. I do know why maybe we are. We focus in and we've done well in the past on startups and a startup company, and that really is what this whole space is. You know, we're 6 years into legalization, and if anybody's familiar with a startup or startup companies, you really got to be fast-paced, got to be nimble, and you really can't be too one-sided or one short-sighted, I guess is how I put it. If it's growing today, well, then we grow cannabis. If it's production tomorrow, then we make sure we produce something that somebody wants to buy. A lot of companies really spent a lot of that money on facilities or operations that were really focused in one area, and they have a hard time switching over to a different segment in cannabis, be it retail, be it production at the time, be it I guess there used to be the million square feet of grow space race that everybody had back in 2018, 2019. We really focused in on making sure that we were a business that was able to make money. So that whether that's the retail space, or whether that was growing, or whether that was actually manufacturing, production, extraction, we went with the punches and seen what was next. And again, we listened to our customers on what did they want to see, what did they not want to see, and went with it.
I think that makes a lot of sense. The fact that you guys are now profitable and nicely profitable, you indicated you've started to pay down debt. I mean, looking ahead, is that sort of the continued plan? If you continue to see the kind of cash flow you're seeing right now, what do you feel is the best use of that cash?
Twofold. So a little bit of expansion. We got some expansion room. We really have a belief that if you can't pay for it, don't build it. And cash is very hard to get right now. So I mean, we're going to be hoarding a little bit of that cash and put it into our coffers. We've got some good bank rates right now. I mean, a lot better than what is traditional. I mean, they were sitting at a 4.1% on a 10-year amortized mortgage, and we're fine with that. We're happy with that. We've got good relationships with our lenders. They're happy with us. We're, again, one of the unicorns in our space. So we're, a majority of it will pay it, continue to pay it down at the rate that we are currently. But we're not looking to pay it off immediately, because it is at good rates and a good partners.
I think I heard you say, have you been public for 6 years? Is that what you said?
No, we've started the company 6 years ago. I think we've been public just over 4, just coming up 4 now. So right at the tail end of walking down the street with a cardboard sign and saying I need $100 million. We missed that boat, but for the benefit of the company.
Yeah, I would argue that that's probably why we're seeing some of the smaller companies doing better than others, is simply because they've had to learn how to run a business much faster than the others did.
Yeah, very true.
Yeah. I mean, so now you've been in business now for 6 years, roughly 4 years public, but what do you think is the biggest thing that you learned? What's the thing that you've done right, and maybe the thing that you've done wrong that you've learned from?
Well, good point. I think what we've done right is build a business, a real true business, and really in the inflection that, build it and they will come mentality. We wanted to build a business and let the market decide whether we're worth something that is investable or not. On the good side of things. On the bad side of things, we really haven't promoted the stock huge over the past while. And that's really, I'm going to say, my decision. And that comes on the heels of trying to promote something in the bad weather that we've seen over the last 3 years. Really is an uphill battle. And I think you see the big boys put out bad news quarter after quarter after quarter. It's very hard to battle that uphill battle. We're pushing against the wind there. So, would I have done it earlier when we first went public? I certainly would have put some more capital towards that. Again, maybe not a true detriment to the company. We're here, we're shiny now. And I think now's the time that we can have somebody really believe in the story and believe that we're going to be a good long-term player.
I think there's close to 140 million shares outstanding. I think that was number Trevor mentioned.
Correct,
what percentage ownership is owned by insiders or those close to the company?
Probably just over 70%. It's a pretty tight.
70. Okay, wow.
Yeah, it's pretty tightly held. And that's kind of a true testament. When we did go public, a lot of our original investors / insiders are still with us today.
Yeah. Now, earlier you mentioned expansion. Does any of the expansion involve any M&A? I would imagine there's a lot of other companies that are probably struggling right now. Are you looking at potentially buying some?
We are. We're looking. We're heavily in the M&A space right now. I've made a promise to my shareholders and my directors that we won't go back into the negative by making a bad deal. There's a lot of deals out there. We just don't want to make the bad decision and be another victim. So we'll take our time. We'll see who's in the space, who can actually function and at least be net zero. And then with some synergies, we can see some positivity out of that. But we don't want to, we're not going to assume a bunch of bad debt, which is really what's on the table currently, as a lot of guys are trying to get out of their over-mortgaged properties or just bad debt in general with some convertibles. So I think, over the next 12 to 18 months, we're going to see some good moves on that behalf.
And speaking sort of looking forward, where do you see the industry going? What sort of things do you see that can happen to change the industry, or maybe more of the same? What can you tell us about that?
I really feel that it's going to level out over the next 12 to 18 months when we see some normality come back to the space. It's not going anywhere. It's not that we've needed to produce all these new customers or anything of that nature. It's just a matter of keeping our customers happy. Cannabis connoisseurs over the last time, they haven't changed. They were connoisseurs 20 years ago and they're connoisseurs today. So it's not a new market. It's an existing market that we're trying to convert over good people to. That coupled with, it's really a long-term play. I think given that another 12 months, 18 months, the survivors are going to be the winners out of this, and you're going to see some larger conglomerations that are doing it right. and take over, a good share of the country.
Mhm. And what do you see as the biggest challenge you face as a business, maybe, or what sort of keeps you up at night?
Lots of things.
Never just one, right?
Never just one. Never just one. No, really, our main concern right now is just keeping our customers happy and continued growth. We really have a fast track for growth sitting in front of us, and I'm trying to hold the reins back on the horses, because we want to see that hockey stick action. I don't want to see a spike and then see it start to drop back down. 1 month good, 1 month bad, and see that cycle effect happening. So really, for us as a business, we want to see the steady growth, and that's tough to do when you're in demand and you got some hot new products and stuff going out there. And we could push a lot of our new innovations a lot harder. But again, I don't overpromise and underdeliver ever. So we want to make sure that if we're in market one day, we're going to be in market the next day, not in and sold out and can't supply again. So that's really a lot of our challenges.
Mm-hmm. I mean, this last quarter or last year has been a phenomenal growing year for you guys. What makes you confident that you can continue to sort of grow? I don't know if that pace, but what sort of does the next short term look like for you, and why do you say that?
We've got good vision on the next 6 to 12 months at least, barring any market condition, collapse or change that that are unforeseen, obviously. But for anything that foreseeable future, we've got good growth coming. Again, our innovation pipeline keeps that moving along. We're not seeing declines in our products. We definitely have a good solid base to work from. And I think that base is really here. I think that, last year, again, like I say, was a good growth year. Now we're into that, call it phase 2 of growth, where it could be a little steadier. We've got a good base, and just going to, keep piling on little bits here and there where we can to see that extra just spike a little bit and hold there and create a new base for ourselves.
Mm-hmm. And then looking further out, 5 years from now, let's say, what do you think this business looks like? Where are you guys in 5 years?
God, Paul, you're asking a lot on a cannabis question.
It's hard to predict what's going to happen next week, let alone 5 years. But just generally, like, is this a business you're going to want to package up and sell? Is this a business that you want to be the dominant player? What sort of do you see as that longer term strategy?
That's a good question. I think my strategy is always we want to build something that somebody wants to buy someday. Now, whether you ever sell it is a different story. So we want to make sure that we have a product that is sellable 5 years down the road, like you say, 2 years down the road, 3 years, however it may be. But we feel ourselves that we are going to be a strong player in the market, and that's okay. You can sit there and be a strong player all day long, and the right numbers come along and right offers come along and right opportunity for our shareholders. Well, then we have a good look at that. But until then, we continue with the path forwards.
Mm-hmm. Now, Travis, as investors on the outside, sort of looking in, what do you think? What sort of metrics or catalysts should we be watching out for to make sure you guys are sort of running on the right track?
Really, our cost of goods is a major one. I think that's a bit of a key to our success, is that we've got, again, good partners, good pricing on our input materials. We've really worked on our internal pricing as far as cost of production, and we can maintain that. Again, barring anything that happens in the government, it changes very rapidly, but it is getting steadier and it's getting a little better. If the excise tax repeal starts to come or along those lines, well, we're going to be really, really good shape. We paid a lot of excise tax last year, and for those that aren't familiar, flower producers pay a lot less than what concentrate producers do, because we're based on milligram per gram, not so much on the dollar per gram that flower producers are. So we pay a pretty heavy excise tax, and there's a lot of talks around it, but again, it's government and never a guarantee. But there is talk of retrieval on some of the excise taxes coming down the pipe in the wake of a lot of failures, and that is a good portion of it. So, for us, it's about 40% of our business goes out the door, and I haven't owned or worked in a industry where that happens ever. So I mean, the day you make the sale, you're paying 40% to somebody. It's pretty tough going, but that's part of the game.
Yeah, it's definitely having your hands tied behind your back.
Yeah, absolutely.
Yeah. Listen, I mean, this has been fantastic. First off, I want to congratulate you on being one of the few companies in the industry that are profitable, but, spectacular year last year. And it looks like, you got continued growth trends in place here. But, is there any last message or key takeaway you want everybody to walk away with today about knowing about the business?
Watch for Q2. Keep your eyes on Q2. I think it'll be a good watch for a lot of people. So.
Fantastic. Well, good. That's crystal clear in my mind here. We've been speaking with Travis McIntyre, CEO of CanadaBis Capital, CANB on the Venture Exchange. Travis, again, congratulations on your year, and certainly thank you for your time today. Great to know the business, and we look forward to catching up in the near future.
Thanks, Paul. Thanks, Trevor. It's been a pleasure, and anytime. Appreciate it.